Hello, friends. Bob Ross, aka Mr. Prez, here back with another happy little video. We're going to be going over something I've covered in a previous video, but I kind of wanted to remake it with better examples and a little bit of a better explanation. I don't feel like I quite explained it as well as I could have in the past. Um, so before we get into the examples, the topic of this video is going to be exhaustion volume. So first off, what is exhaustion volume? So to me, there are three stages of volume. There's ignition volume, there's continuation volume, and then there's the topic of this video, exhaustion volume. So I consider exhaustion volume to be that, kind of grand finale orchestral exit where everything is moving quickly on both sides. You have, shorts piling in at the end of extended downtrend, shorts covering at the lows, buyers swooping in to initiate their positions, shorts covering. Um, on the other hand, you have that last explosion of buying, FOMO, people chasing at the top of an extended move up where last second buyers are getting in, FOMO sets in. And there's just not enough gas left in the tank for that next leg up before, profit taking sets in, shorts start coming in for those day trades, those scalps. So the two main criteria that I look for when I'm searching for exhaustion volume or seeing if exhaustion volume is about to get put in. The first is the move that we're looking at extended. Um, Extended can be flexible and scaled to the specific time frame you're looking at. Um, but I wouldn't expect exhaustion, after say two candles in a direction. I'm looking for that final push at the end of say, six, seven, eight, even nine candles up or down. Um, as you can see in the displayed kind of overview I have um, displaying right now. So you have the extended move up or down, and then the second criteria is I like to see what I call outlier volume. And so what I mean by outlier is simply way above average, depending in reference to the in scale to the time frame that you're looking at. I don't want to see it barely creep over the igniting volume or barely creep over the 30 SMA of your volume by time. I want to see 3 to 5 times the size of the average volume bar come in and create, massive towering bar. But like I said, it's all about context. You don't want to mistake ignition volume for exhaustion, because A, the trade just won't present, and then B, if you enter the trade mistakenly, you could get burned. So, and this, that comes with just watching and starting to pay attention and searching for these three different kinds of volume. So, the basic baseline strategy is it's very important to keep your time frame in mind when you are taking any exhaustion volume related trade. If you're playing exhaustion on, say, a daily chart versus a 30-minute or 15 chart, you're likely to swing a 1 to 3 day period. If you're on that 15 to 30-minute chart, you may only be scalping or trading, day trading 2 to 4 of those bars. You don't want to get stuck in a trade due to the wrong time frame analysis. You don't want to take exhaustion volume on a 30-minute trade and then end up holding it for a week, which if it works out, great, but in terms of risk, that's just not how the strategy is supposed to be utilized. The weekly, the daily, and the monthly exhaust are obviously going to be your strongest charts. If you see obvious exhaustion at the end of a move on a daily chart, for example, I'll try to find it. Amazon did that a couple of weeks, maybe a couple of months ago at this point. Put in exhaustion volume and then ended up bouncing, I think, like 200 to 250 points. So it scales with the time frame that you're looking at. So let's start getting into some of these examples. So starting with the example that I had left up in the overview of the video. So with the seller exhaust day trade example, you can see, after a pretty large extended move down, you've got this nice lower shadow coming in. Buyers push price back up at the end of the day. So you can see, this isn't 3 to 6 times the average, but it's a pretty compared in the context of the other. You have your ignition volume up here, continuation volume right here. So at the end of a very extended downtrend, you have what I would call seller's exhaust. So in terms of taking the trade, if you see my arrow right here at the entry retest level, you've got this previous consolidation. So this is an obvious area of interest. So to me, I would have either taken my long at the break of this high of the exhaust candle itself, or based on other technical aspects of the chart, whenever this resistance level was breached above. Um, you know, And the reason it says entry slash retest level is if I were to extend this arrow to the right, you can see, and this comes back to that fundamental belief that it will always come back down and retest price. If I were to extend this arrow to the right, this wick right here would have just confirmed that move. And then this is a whole different strategy right here, buying this dip and scalping this right here. So in terms of exhaustion, you've got your extended move down criteria check mark. You've got your outlier volume check mark. So that's a pretty good example on the sell side in itself. And I believe this is a daily chart, but I cut the details out as to not provide the bias because this really can work on any chart. So by your exhaust day trade example, you've got this nice igniting move down here, confirming the exhaustion. You're in your trade, you've got basically 6 wide range green candles up. Um, this decent upper shadow comes in, kind of provides a warning clue, but the volume down here is what really gets my attention. That's that orchestral FOMO outlier volume extended move up. So how do you trade that strategy? What you want to do is a lot of the times, if you don't know that it's exhaustion, you can simply short at the pierce of the open or the close of the candle up here, right here. But what I like to do to be safe is I wait for this low to get broken down here, and it provides a nice scalp opportunity slash day trade, depending on whatever time frame that you may be on. I have the entry retest level again right here because if I extended this line like I did, you can see that price ultimately came back down and acted as another point of resistance at that level. So these retest levels are pretty significant in terms of price targets and where you could possibly exit your trades. All right, so next up, this is a very recent move actually. We have Planeteer has been seeing a lot of buzz lately, especially with Kathy from ARK, her interest in the stock. So you can see right here, pretty extended move down. You've got six moves lower with 2 gaps, and at the end of this move, you've got a red hollow candle, which means price closed higher than it opened. Look at this volume. Compared to all of this in the past, you have this huge volume by time bar. Right on along the point of control as well, which is just another context of strength confluence, So I'm interested to see where Planeteer continues to go. The exhaustion move's already starting. I mean, look at the volume the next day. So if we get over this high right here into this gap, I'd expect to see a pretty nice move up on Planeteer or Palantir, sorry. Um, Camping World Holdings Daily, another nice example right here. More specifically, we're looking at these 2 wide range sell bars right here. You've got your your lower shadow right here, and look at this volume compared to this whole sell off, compared to this move right here. Based on the context of the chart, sellers are getting out, shorts came in at the last second, buyers pushed them back out, and now those shorts are having to cover once these highs start getting broken right here. So how would you take this trade? You wait for this high to get broken right here, stop loss somewhere down here in a perfect world, and then you can use this gap right here. That could be your price target, the low of this red right here. You have to use the context of your chart, but this is just to show you, you see this lower shadow, you see this high volume, could be your exhaustion coming in. Especially when the candles put another lower shadow, get pushed back up. It's a pretty bullish sign right there. All right, the homie Nolo sent this in, Starbucks Daily. This is a good example to me because, let's see, try to zoom this in if I can. So exhaustion does not always immediately reverse. So you see this is an obvious exhaustion candle. You've got this huge gap down. This is a pretty motivated sell right here. But you see two candles later, you're revisiting those lows. So what I like to tell people with exhaustion volume is that when if it's not immediately going to reverse, it at the very least provides you really nice clues of when a reversal could start to materialize. So once you start seeing these exhausted volume bars coming in at the tops and bottoms of these extended moves, at the very least add it to a watch list, or at least your ears should perk up, your radar should go off. At least start to watch that stock. Especially if you see exhaustion on a daily, I would start watching your intraday movements for those scalp opportunities. So which you can see it took a couple of bars, but look what ultimately happened with Starbucks. So, and you could have waited to take the long. Obviously hindsight's 2020, but you could have taken the long right here. You could have waited for that high to break, but doesn't matter. The whole point of this example is to show you that they don't always immediately reverse, but you should start paying attention once you see it. All right, Jeff trade submission. This one's nice because it shows that while it doesn't exactly have that outlier volume, that thunderous, monstrous, towering volume, it is in context larger than the entire ignition volume, larger than this entire move up, and this move up is extended. So what that tells me is you have an extended move up, the volume's not even that large, but the volume at the top encompassed all of that move. So that tells me that there's not going to be enough gas left in the tank before you see some kind of consolidation, pullback, profit taking, or whatever. Oh, let's see. Sorry, hold on. So you got Digital Turbine Daily. This is a nice example right here. Very clean example. Huge grind down, 1, 2, 3, 4, 5, 6, at least 10 to 11, 12 bars down. Um, you get your exhaustion doji right here. So if you were to wait for that high to get broken, you have your entry slash retest level, and you can see these two red bars come back down ultimately and confirm that long. But look at the volume, blasting right over that 30 average, 30 SMA volume average, even larger than this ignition volume over here, or this buy volume over here. So once that high gets broken, all of those shorts and all of that volume, all of those longs, the longs are going to be winning, the shorts are going to have to cover. And so you see this on a daily move. This is 5 days of solid range on a daily. So, and that's just based off this exhaustion. Close this one. I've got examples everywhere. Sorry guys, hold on. Okay, so I think this is supposed to be an example of the buyer exhaust. Yep. So this one's kind of a more unclean example, as you see you have the outlier volume criteria, you have the extended move, and so you have this exhaustion volume on the daily, I'm assuming. So if you were to go into your lower time frame movements, that's probably the only way you could have taken advantage of it on this first day, because as you see, this low kind of doesn't really get cleanly snapped through. So this isn't the best example, but if you were able to take advantage of this bar right here, it could have provided you a nice opportunity, or it could have at the very least told you probably not to initiate your long at that level. Okay, so this is a pretty good one right here. This isn't part of the example, but right here even, you've got slightly heightened seller volume on this candle right here. So in a perfect world, if you would have waited for that high to get broken, you have your retest right here, your entry retest. Could have provided you a nice exhaustion push there. But the real example when I saved it was this volume bar right here. So engulfs the ignition, engulfs all of that. This is your FOMO grand finale orchestral move, and if you take your short at these lows, you're provided with a nice range ultimately. That second day gets kind of iffy with that shadow, but that tells me that if you were in this position at one point, you could have sold at that low as well. And had you held your position, obviously it would have worked out for you. You wouldn't have known that because you can't tell the future. But moving on to the second position, look at this. Look at the sell pressure at the bottom of 1, 2, 3, 4, 5, 6 candles. Look at that. So that tells me that this downtrend could be starting to reverse soon. So you see this doji that you could have taken it at the high. I mean, at the high break right here, that probably wouldn't have convinced me. I usually would like to see the exhaustion candle itself get breached. So that's why you see my entry at this level. And that would have provided you with a nice little scalp trade, whatever. But you see, look, you got the outlier volumes, top of an uptrend, bottom of a downtrend, and then you have the subsequent moves in the opposite direction. And when you're trading options, these can provide those nice, sharp, drastic turns in volatility that give you nice pumps into your premiums as well. Carnival Corp daily, this is a nice example right here. The strategy stays the same. So you've got your nice move down, pretty extended move down. You start to see that sell volume increase this day right here on this wide range ignition bar, or wide bodied sell bar, sorry. Got to be careful with the terms I use. But, you see the doji come in, you see the exhaustion volume come in, so your ears perk, your radar comes up. You wait for this high to get broken right here, in my opinion. The low of this wide range bar is very significant on a technical standpoint. So you have to pair the context of the exhaustion with the context of the chart, with the context of the previous low. But ultimately, as long as this high gets broken, that's your entry, and that would have provided you on a daily frame, a pretty nice day trade range, or like swing trade, that range right there is pretty decent, especially if you held those extra 2 days. You got a little more out of it. Slight example of buyer exhaust I didn't catch when I saved the example. You don't really have great outlier volume, but it comes after a nice gap up. So if you were to wait for that to get in, and could have provided a decent short, but that's not why I saved the example. Just helps to always have more visualizations, right? So crank through some more of these examples. This one in particular is why I say you have to be careful to not confuse it with ignition, because this is exactly one of those examples. While you could have taken this short right here, scalped a little bit, you would have ultimately got shaken out, because this is ignition volume. You have, after your reversal down here, you have your breakout, and this pink line on my charts is point of controls. So that tells me already that you're getting over a very large, significant institutional level. So if you were to take this as an exhaustion play, you would have waited, for this to get breached. You had a little bit of a scalp opportunity, but ultimately you reverse up and go into the opposite directions. So you have to be careful when determining the context of these moves, because this isn't very extended up already. Now it's a very wide range bodied candle, but in terms of, being six, 7 candles up already, I was not seeing that in this example. But, those curveballs will present themselves, so you have to be sure to watch the context always. So this one right here, I'm not exactly sure what chart this is at this point. What ticker, I mean. Doesn't matter though, because you can see. Let me unzoom this just a tad. You've got 4 bars up with this gap, the gap up with this such a dramatic wide range kind of check marks the extended move, in my opinion. And this volume, I mean, this is 3 to 4 times this average size of any of that previous price action. So that to me kind of told me that there was going to be more of a steeper pullback coming. So if you would have waited for the low, taken that trade, that would have provided you with a nice short range right here. So that's that's the whole point of that example. And that you have the opportunity, the sell bar right here. You have that increased volume. You wait for that high to break, and then you would have had this range right here to kind of scalp those longs. But, that's kind of more advanced, harder to do. All right, you got your extended downtrend, your huge push at the end on massive volume. And what's nice about this is you get the next day, you get this lower shadow put in with this nice bullish bar. So you wait for that range to be breached to ignite your trade, but you see ultimately that with this exhaustion volume, you very quickly have a reversal in price, presenting you with a nice opportunity. Okay, we're down to our last couple. This one, same thing. Doesn't provide a crazy opportunity, but you get your outlier volume. You got the previous day put in a nice lower shadow telling you that bulls are trying to defend price. You bounce off a technical support on super high volume. And this provides context in the sense that this can tell you where your scalp opportunities may lie. This black line acts as an obvious resistance point. So if you were to take the breach of this high as the exhaustion play, sell, get your profits at the resistance, that's a pretty consistent and repeatable strategy that you can use to build decent income. This was sent in by T Gritty Trades. I'm not sure which Twitter handle that is, but I had this saved in my folder a while back. Huge buy exhaustion on this. What is this? EBIX. Not sure the stock, but you can see pretty extended move up, and then you get the buyer exhaust with these pretty gnarly, choppy red candles, but ultimately it presents you, with a nice short opportunity, especially if more advanced. You probably would have taken your short once the close of that body was breached. But ultimately, this shows you the last finale, orchestral push of the buyer FOMO chasing, etc., before gnarly profit taking ultimately came in. Okay, so back to the original example before we close out here. Exhaustion volume has been one of my most successful scalping strategies. Especially on those days where you see SPY and QQQ, you see them gap up very nicely in the morning. So a lot of the time what happens is you sell off in the morning, and as a novice trader, what do you tend to do? You freak out and sell your positions for a loss, and then what ultimately ends up happening? You see at 9:30 or at 10, sorry, I'm Central Time. You see at like 10:30, you see this reversal come in, and then you're like, dang, if I would have just held for 20, 30 minutes, I would have kept my profits or broke even, whatever. So a lot of times you can find these exhausted moves on the 15, 30-minute charts, 10-minute charts on SPY and the major indexes when these sell-offs happen. and provide you the really nice opportunities to get in and at those 10:30, 11 o'clock reversals and ride your calls and ride your longs throughout the entire rest of the day. Depending on where, news, chart, technicals, etc. So that's all there is to it. It works on the buyer side, the seller side, and based on follower feedback, it's been one of my most successful, tidbits of tips and tricks. So I really hope you guys get something out of it. This video, I feel like, covers the base idea in way more depth and detail than I did the first time. So, um, yeah, just let me know how you liked the video and please give me some feedback. Hope it helps. Have a great trading week next week, and let's fucking kill it. Kill it with kindness, of course. Happy